screen here. It's moved over a little bit. All right. So going to touch briefly on what we're setting up and what we're trading this week. We're trading the ORB strategy, or the ORB breakout strategy. Opening range breakout is what we're trading. And we're doing it this week because, again, someone asked about it and was trading it and having some a little bit of issues. So looking at that, analyzing that, they're trading it on the Nasdaq. So, of course, I don't look to trade just one instrument. So what, of course, I'm doing is looking at all four indices, not just Nasdaq. Typically, what I've seen is, of course, we don't get a huge breakout on the day on Nasdaq. A lot of chop. So that being said, that opening range breakout, a lot of times it will break out and run to profit target 1, based on that profit target being the same distance. A 1-to-1 distance is half the range. Okay, so between the opening range high, opening range low, half that midpoint, that would be where you'd want to put your stop loss, as far as what I've analyzed was the best option for a stop loss. You definitely don't want to go 3/4 of the way off the box or all the way on the other side, because if it's reversing, it'll cross over. So good morning, MC. So I am looking at several all the indices, and going to compare those at the end of the week, as well as look back through the rest of the data. So, of course, over the weekend, I analyzed NASDAQ on it for over the last month. It was actually about 5 weeks. And then after analyzing it, looking at it, see how much, did it break out of that between that first 15 minutes or half hour? What profit target did it go to? Was it enough to make money for the month and stay positive? Was there a decent win rate? So the win rate was over 75%. I can't remember if it was like 77, 78, but I believe it was over 75. It might have been 73 actually on NASDAQ, because last night I went over S&P, and that win rate was around the same. It was around that 73, 75 range. So decent win rate on them. So I was happy to see that. A lot of times, again, NASDAQ only went to PT1, profit target 1. Not really happy to see that, but we typically then don't get those breakouts where they just run and run and run for our runners. So that's a little disappointing that our runners don't get to fully run, but of course that's only if things progress and run. So let me jump over real quick because I want to get to the charting before 9:45. Now, doing this again, we're looking at only trading during, we're looking at 10 a.m. to noon is what I looked at, because when I did go back and look, there were several times that if you waited just the first 15 minutes, because that is a question, do you wait the first 15 minutes of the U.S. stock market or the first half hour? There's some people that even wait 5 minutes. To me, if you're waiting just the first 5 minutes, you're not really trading a true time-based breakout. Would you do that on every 5-minute candle? You see what I'm saying? Would you come in at noon and look at a 5-minute candle and say, if it breaks the high or low, I'm in? Okay, so because that's pretty much what you're doing then. So we know that during the U.S. stock market, things are going to move. What I noticed was that a lot of times during that back test, and then, of course, then I went through in replay mode and actually traded it the way I would trade, putting in just 3 contracts because I wanted to keep it small for those people that have small accounts. So putting on just 3 contracts, closing 2 contracts when it hit PT1, and moving the stop either to break even, or you can move it halfway to protect half your position on your remaining contract. By doing that, of course, it was profitable. So again, we're looking at taking all the signals between 10 and noon. And then the afternoon session would be 12 p.m. to 4 p.m. You only have to trade if you've taken losses in the morning. If you have no winning trades in the morning, then you would want to trade between 12 and 4. I mean, you have the option. Now, if you're working, you might not be able to. So we're looking for that 2-hour trading. Can we come in and just trade 2 hours in the morning and be done and profit for the month? Okay. So the afternoon session, again, 12 p.m. to 4, that's that redemption period, I'm calling it. You get a chance to redeem yourself. If you've taken, what I saw when I look back, and then also what I've seen so far, is that if you take one loss in the morning, typically you'll be able to cover that or cover that and profit in the afternoon. If you take two losses in the morning, a lot of times the afternoon only covers one of the losses, which is still great. If I take two losses in the morning and I can cover one of those in the afternoon, I'm fine with that. It's one loss for the day instead of two, okay? That's still a better day to have one loss instead of two at the end. So you have the option of trading the redemption period. And again, if you've taken no winning trades in the morning, I would want to trade in the afternoon. Look for that breakout. Of course, today we have FOMC coming out, so you need to be aware of that this afternoon. So that should help push if it breaks out beforehand. Now it might turn in reverse, so we'll see on that. You don't have, and if you take a profitable trade in the morning, you could take another trade in the afternoon. Even though it's redemption period, you could still take another one if you want because you did profit in the morning, but you don't have to. We're looking for ending on a positive note each day, okay? Here's the end of day, yesterday. So each day I'm posting the quad chart from the day before. So this is where we ended up yesterday. Again, the opening range here, I'm going till 10. I am marking, you'll see this vertical line marks 9:45, okay? But we're waiting till 10. So this right here, it doesn't matter what instrument you're looking at. I know Nasdaq's behind me here on the bottom left. I need to get over the charting here. Actually, I'm in the image, so I can't do that. So the bottom left chart's Nasdaq. But if you look at between the vertical line 945, okay, on these instruments, basically after that, between 945 and 10, it looked like they broke short. You had a candle actually close below the low. If you only went and marked the high to low between 930 and 945. So if you would have taken that, it would have been a losing trade. So I'd seen when I back tested a lot of times between that 945 and 10, if you were taking trades and only looking at a high and low between 930 and 945, you were taking trades and then your first trade was a loss. Well, I don't want my first trade to be a loss. If it happens, it happens. But I'm looking at the odds. So looking back and back testing, the odds were that between 945 or between 930 and 945, if you use that as your high and low, it would break, close past it, and if you took that trade, it would be a loss. So I had to adjust and go to 10. So because when I started looking at this, again, there are people that go wait the first 15 minutes. There's people that wait the first half hour. There's also people that wait an hour, okay? So that being said, I was looking at that 945 to 10 specifically when I back tested. That's why I put the vertical line there, okay? So again, the other vertical lines are noon and then 4 o'clock. So if we break out and run during the first session or break out and profit, we don't have to trade the second. As you look, the left two charts, top one's ES, bottom one's Nasdaq, they both went past level 1 and level 2. So you'll see that, and that was after lunch, afternoon. They both popped and went up past level 2. Past level 2. If you look at Russell, it barely hit level 1. So it did the worst yesterday, Russell. If you look at Dow, it popped through level 1, not getting to level 2. So it did okay. So that's where the tracker comes in that I put together. So I am tracking this. We're forward tracking, but I'm going to go back. I decided last night I'm going to go back and look at all four. So I did another video last night, and it was on S&P, so I tested it. So Saturday, I tested Nasdaq, put together the slideshow for you guys, did a video. So I decided to go ahead and do the other three indices. So I did S&P last night, put the video out there, and I did create a playlist on YouTube just for the ORB strategy. So that playlist is out there, and it does have the 2 videos in it already. I put them both in last night. So again, that's Nasdaq results and then ES results last night. Now, last night I didn't go through and put together all the slides like I put together in Nasdaq. So that, or on S&P, I didn't do that. So Nasdaq, it has all those slides, every, of the back testing. On ES last night, S&P, I did not do that. There's not a lot of screenshots. I just went for the results. I quickly covered how we're trading the strategy, and then after that, it's straight into results. So it resulted very well. It was over 4,000 for the month, where Nasdaq was 13,000. S&P was 4,000. And you got to keep in mind that they're 2 different instruments. They move the payouts better on Nasdaq. Obviously, that's what the appeal is to it. That's why a lot of people trade it. So, but S&P, real happy with the results. It was again around that 73 or 75%. I don't remember exactly the percent, and I'm not going to go look at the slideshow for it. So it's in that video. But same results. So great results on it. I am going to test the other 2 as well. I'm going to test Dow and Russell. So what this tracker's for is, again, we're looking at how many profit target levels does Nasdaq hit today? Does it just hit 1? Does it hit 2? And this is close past. I'm marking what it closes past. So when you see these levels, if you see level 2 here today, it closed past level 2. Okay, I'm not counting if it almost hits it. Okay, because I want to have dead set data, because when it moves to profit target 2, I know that I'm moving my stop to profit target 1 when it closes past profit target 2. So that's what the data I'm looking for. Does it only close past profit level 1? The other is, how many trades are we taking today? Are we end up taking 2? Do we end up taking 1? Monday we took 2 on Nasdaq. Yesterday we took 1. Okay, to get into profit. So yesterday was a good day. Again, it hit past profit target 2, and we actually had only 1 trade to profit. So that's what we're looking at here. What I don't want to see is a lot of this. I don't want to see a lot of check boxes in here. This is if we have to trade that redemption period. So again, if we have no winning trades in the morning, if we're trading today and have no winning trades this morning, and I have to go in and trade at afternoon between 12 p.m. and 4, I'm going to check that box. That means I had to trade in the afternoon. I don't want to trade in the afternoon necessarily, right? If we can come in at 10 o'clock and start looking for an entry, and we could profit within the first 2 hours of the day, the U.S. stock market, then why would I sit around the afternoon? You end up making mistakes. You end up taking extra trades you shouldn't. So I don't want to see a lot of boxes checked where we have to trade the redemption period. Okay, so that's what this tracker's for. That's solely what it's for, and I made it up for. I want to see at the end of this month which one of these would have been better, played out better for the month. Maybe S&P. You look at S&P, so far the first day it went to profit target 3, 1 trade. Dow Jones, first day, profit target 3, 1 trade. Yesterday, though, profit target 1, 1 trade. Profit target 2, 1 trade. So which would I pick over the 2? As of now, it'd be S&P. Okay? Because Dow only hit 1 profit target yesterday, or closed past 1, where S&P closed past 2. Okay? Russell, same thing, 2 and 1. So it didn't do as well as any of them. So Russell right now is bottom of the list. Nasdaq's in the first section only because that's what we're trading today. I don't know what it's going to end up with today. I don't know how many trades we're going to take. So that remains to be seen. So at the end of each day, of course, I'm posting out in the Discord and we'll get out to charts here in a minute. So each day, again, I'm posting out to Discord, and you'll see this tracker with the updated for May 7th. And then the quad chart, the 4, how it ended up, and then also the results on Nasdaq, okay? So let's get out to the charts. And I'm going to have to pull it up or refresh or something here. There we go. All right. So we've had some, let's see. There's the quad charts right now. So I'm going to, let me make sure I shut this off. I did. Just let me bounce around here for a minute. Any questions on that, just post them in the chat. So we're looking at started today. Again, we are only watching Nasdaq right now. So we'll blow that up. Right now I've got, let's see, it's got the back history shut off. Whoops. All right, there's where it was from yesterday. So right now where we are at, we're right at the high. Okay. It's pulled back to hit that high. Okay. And ultimately, you'll see that it went up through more targets, but that was after 4. So the reason why I'm running it to 4 is because a lot of traders are trading prop accounts. I don't recommend trading. You have to have a decent size account if you're trading Nasdaq with real money. So I've seen people come in with, a few $100s, few $1,000s. It's not enough to trade Nasdaq. So that being said, if that's all you have is, $500, $1,000, you might want to look at going with a prop firm, still trading this strategy, but you'll have enough equity in that prop trading account that you can put the stop where you need to. Again, what I've been doing is getting in the trade on the break and candle close on the outside of the box, and putting my stop in the middle. Now, one of the traders commented on, he had some lines down here. You guys know that for this strategy, I cleaned off my chart of everything, of the 4-hour zones, 4-hour, all the 4-hour levels and 1-hour levels, and just cleared everything off the chart just to put the indicator on and have a clean, fresh perspective to see if this could be simply traded off of one indicator on the chart, trading this mechanically on a break and close outside of the box. And yes, it can be done. This was the area where that was looked at specifically. So you'll see that the yellow is my box, and I got to watch our time here. We still got about 6 minutes. The yellow box here is 9:30 to 9:45, the first 15 minutes U.S. stock market. If that's what you're trading and you're waiting on a break or high or low, there's people that would have taken this trade short, okay? Now I'm looking at the box from 9:30 to 10, so that kept us out of taking that. The reason why I decided to go to 10, again, through my back testing and looking back, I noticed that there were several times where if you had just used the first 15 minutes, a candle would close below that low, put you in, and then your first trade of the day would be a losing trade, which still may happen, doing 9:30 to 10, but it happened a lot, okay? And I'm an odds-based trader. I want to put the best odds in my favor, okay? If I'm going to sit here and trade, I don't want to trade that. If I see that, and I don't know what it was, guys. I didn't calculate that. I didn't write down those stats to say that over 30 trades, 6 of the times or 10 of the times, if you traded 9 to 9:15 and then look for a break, that 10 of those days or 6 of those days it popped out, closed past, and then pulled and hit your stop. So I don't have that stat for you. I just know that for me, as I'm looking back, I'm going, wow, it's a lot of times if I use the first 15 minutes, it would break and close past only to stop you out. And for me, it's like, okay, I don't like those odds. I don't like what I'm seeing. So I'm not going to trade that. So specifically when I was back testing this, that's why I put this vertical line tool on the chart. And there's one free out there. That's where I got this one. It won't say 12 and 4. It's just one vertical line. So I went into the script and added 2 other lines. Originally, I just added one and then called it 12 p.m. to 4 p.m. lines. And then I decided to add one at 9:45 for the back testing on this. All right. So that's where we were. We can leave this on the chart if you want. I don't know why I'm trying to scroll manually. So right now we're kind of waiting still. 9:57. So it does get kind of boring watching candles tick over. I don't know if we're in for an exciting day or not. We'll load 3 contracts up here. I do not have the power trade indicator on. I decided for the live this week, I would leave it shut off. We can kind of glance. It's been short over here since this area right here where all 3 time frames have lined up. I do have them adjusted on a tighter time frame, or no, I don't actually. I have them on the 15, 60, and 4 hours still. So that power trade indicator has been short, and that's based on the 15-minute, 1 hour, and 4 hour time frames. I won't leave that back on the chart again because I said this week I wasn't going to do that. So we'll shut that off. So it's been short. So back to the beginning of yesterday, the trader that was talking about this, it was MG, was that he had lines down here under this area right here, both on ES and Nasdaq. Well, they were from a 4 hour low right here, or a lower low, 15-minute chart. So I don't know if it shows like that on here's the 15-minute. So basically this swing right here, if you go to a 1 hour price, same thing, 1 hour, right? There's the swing down. And if we go to a 4 hour, there's the swing down. So that's the magic, if you will. And it's really not magic, but that's that going out to the higher time frames. This is something you should do on Saturday or Sunday to prep for the week. Go out to the 4 hour time frame and start. Look for the swing lows, look for the swing highs, mark them. I mark a zone. The zone will be marked on a wick, okay? The bottom of the wick up to a candle body. And then if I was going to draw one, say, on the top up here, I would use this high wick and go down to the bodies. And that would be my top zone. And I'm going to color that. That's going to be my upper zone, so it's going to be red. So we would look for a bounce there, possible bounce. Okay, so you should go out to the 4 hour, and we need to get back down. Yeah, we're good. We still got about 1 minute for the 10-minute candle close. So you should go out always. You should go out at the end of the week, and you could do it Friday night, Saturday, or Sunday. Come out to the 4 hour, mark your zones. I would also mark a mid-level right in here, because you could see where these candles turned here, it dropped down. You definitely have a level support here. So that's what we're hitting over here. So definitely go out to the higher time frames. That should always be done. All right, so we're starting the day. We've got 3 loaded. We're ready to buy or sell. According to the rules that I set up for myself, I was going to trade, take the trade no matter what, entry. Just take that entry no matter what when a price closes past the higher low. So what am I seeing right now? We definitely have some structure here, right? So we had a high, we have a low, we have a lower high and a lower low, but then it pops up. This is the start of the U.S. session. So we've let the first 15 minutes go, and during the second 15 minutes here, it did push back down to test that low level, okay? Which is also, again, the high of, or the high of the yesterday, okay? So you can look back and see how it reacted yesterday to that level being broke. So we're trying to keep this as simple as possible because I know a lot of people out there are trying to look for simple indicators or simple strategy that they can use. And there are a lot of people that work, they're out there working 8 hours a day. They don't have a lot of time to chart, or they got class. I can't remember. I want to say MG. So don't shoot me if it wasn't you. But I believe he was in like class this week or something, and or the other. It could have been last week, but not able to trade. I think he said he could maybe take his laptop and trade trade right before class or something. So their life, right? Unfortunately, life gets in the way of our trading. And so what we're looking at is, and I think that's the appeal to this strategy is, one, you're not coming in staring at the charts all day. So we can come in and we would come in here to the high area. Forgot to set my alerts. And we would add alert, and we would want to add alert when it's crossing up. I think on these alerts you can't, only once. You can't do it on a candle close. For some reason, the alerts on the indicator I have don't seem to be working. So we do crossing down. So we have our 2 alerts set. If it crosses down below the low, crosses the high. I don't like using them. I'd rather have an alert that says when the candle closes above this to alert. And there is an alert on this indicator right here. This is a Lux Algo indicator, but it didn't work. What I tried to do yesterday was use this. Which one did I use? It should have been this one, exiting the channel. We'll see. We'll mark these again and see. So I need the high price. It's going to be 19,944.50. And then I need the low, 19,855.25. I'll set that alarm as well. We know that the manual one here, just the default in TradingView, this alert right here works. So we'll keep them both on because over here in my alert triggered log, let me sweep those out. We should see those alerts then. Okay, now in the log. So we have it set. Here's the ones from yesterday, so I need to delete those. They're no longer any good. So we have 4 that are set. The 2 here are the manual in, where you just come on the chart and click and select the alert here off TradingView. The top one is this one right here. That's based on the, whoa, what happened? It copied one? I don't know why that happened. We got all 3. But again, this one here is on the Lux Algo ORB strategy, or their tool, their indicator. But it didn't trigger for us yesterday or Monday. So we'll put it back on. We'll see if it triggers. If they both trigger, like if it closes above the high, they both trigger. I should be able to come in here to the log and see both those. So we'll see. Let's see. We have, guys, I have no idea why that changes. This changes date. Oh, I need my, I keep saying that, and I need my trade panel open. There we go. I'll switch this over to the order, click that off, and then I just have this on really for if we need to modify, but I'll change that because we really don't need it on the chart. We just got a lot of space right now that we can fill. I don't recommend, putting pending orders. I've talked about that. Some people do trade breakouts where they're going to straddle, and they're going to put a pending order long, pending order short. You can try it if you want. I really want to see a candle close above. And sometimes you'll get whipped out. So let's touch on that real quick. So let's say it breaks out through the high and comes back and stops us out. It could go back through the high again. Or let's say then it goes through the bottom and it closes past and comes back and stops us out. What we're looking at then is sideways movement, right? Like what we have here so far is we have, this is a higher high than this. This is technically with the wick a lower low than this. So higher high, higher low. We have a higher high. Are we going to get a lower low? That is not what I want to see. That's that megaphone pattern. I know you guys have heard. I know the guys on Top Step like referring to that. That's that what they call a megaphone pattern, right? You guys have seen a megaphone. So that's that megaphone pattern. If that's what it's going to do for the day, we can definitely trade it. All right. So we got price closing or crossing. So that was an alert. Let's see if both triggered, or just the one. Yeah. See, we only had one trigger, and that's not the one off the indicator. So I don't know why that one's not triggering. We'll see if a candle closes past if it triggers or not. So we know price breached that level. Making sure we can reset that alarm because it's sucked back down here. So we'll just reset that alert. If I just have the alarms on, yeah, you can still see the price down there on the bottom. Let me move my drawing tool out of the way. I kind of like the way the trade pattern had. Is that what we're looking at? That's what you need to see right there. We'll leave the alert thing open instead of the trade panel because I don't typically use the trade panel. We really don't need to for this. We'll pull up the trade panel will pull up when I go to put the pending orders on. So again, if the profit targets are 1-to-1, there we are playing with that top again. I won't reset it unless it goes below. So I'm ready to buy. We've got 2 seconds left, and it is just playing with the top. So we're starting a new candle now. I would have rather, if it's going to break through the top, I would have rather done it on that candle and seen that, obviously, than this candle. Because if this candle breaks, it could go halfway to PT1. And in that case, if I get in, I need to shoot for further than PT1 for profit. Or use a quarter stop. So if you want to keep it like a true 1-to-1, depending on where the candle is, you may have to come in, depending on where the candle closes, and get in. And I need to move this. Let me move this off get it out of the way. If you get in and you're shooting for that PT1, then you may need to go with a quarter stop to keep it balanced. If you're shooting for true 1-to-1 and you don't want to, because that's what I saw most of the time trading this strategy. In order to keep your stops safe, a lot of times you had to have your stop down here at the halfway point. That's just the way it was in the back testing. Again, a lot of times you had to have your stop down here in order to stay at that 1-to-1 or to stay in the trade. Sorry. So again, a lot of times you had to have it down here, the halfway point, because a lot of times it would close up above, you would get in the trade, and it would come down and cross past that quarter mark, where it's a quarter of the distance. So we're getting our breach of that high. We don't need to reset the alarm right now. What do we got here? We got 1 minute left. So I'm ready to hit the button. We've got 3 locked and loaded up here for the day. Oh, and the slideshow I put up there last night, and sorry it's late. I recorded it at 1 in the morning, and then midnight or 1, something like that, and then uploaded it. Again, that's on the results for the S&P. So you can go out and look at that. But I do have at the end, again, I'm just this week running 3 contracts because I know a lot of people are trading with smaller accounts. So we're running 3 contracts on this this test this week, and I ran 3 contracts on the back testing. We still got about 16 seconds. It's going to barely, we're going to see if it's going to even close above that level. And if it doesn't shoot up here in the next 6 seconds, it's bare. So do we count that as a break, a true break? Not now with the red candle. All right, so we're still waiting. It just does not want to break that high, which is fine. If you look to the left, we see that, of course, that's our high. The line's in the way, but the gray box marks from the lowest point, which was here, to the highest point, which is behind that yellow line. Or no, it's right here. So, but if you look back at where this has been hanging out, it's been hanging out under basically the inside of this top, which is also the support level there. So just look back at this horizontal line that our alarm's on, and you could see that back over here after it dropped through, it pulled back to test it and respected it. Here it broke it, but it hung out just barely above it. You'll see that the bottom of those candles, are right there. So this red candle, even though it shot through it briefly, it closed up above it. So that's a price level to be aware of, even back here. Okay, and we're marking it here, or letting the indicator mark it for the day. So it's always good to pay attention to your highs and lows. We do have a high right here. So we're having some issues breaking out here. I don't know what's going to happen. I don't know if this is going to kind of hang out and go back and forth waiting on the news this afternoon at 2. So we do have FOMC coming out later, the Fed funds rate. So we expect a good move this afternoon. So if we take a loss or two this morning, that's okay, because during the redemption period, we should be able to make that out. I've never traded this strategy through that, so I don't know how that's going to work out. Candle crossing back over that high. I don't like that we have a previous high right there, but again, we're doing this. Naked chart trading, remember? This is the way it was back tested, just trading, just taking when it closes on the other side of the high or low. So we actually have a buy signal that is trying to come in. We have about 28 seconds. So less than half a minute, and we need to chug down some more coffee. I'm not going to reset that alarm unless it goes back down, so we'll open up the trade panel here. All right, guys, so we had a new candle break. I'm going to call that a close above. So I'm already in. I want to get rid of this. That's from the trade panel. I don't want that, but I got to be careful because I don't want to close my order. All right, so we need to pull the stop loss down here. So that's kind of a weak break. So I don't know if that's going to pan out. It's a very weak break. And then I would come up here and we would put an order on. So I'm not sure if I should have taken that one or not, because again, that is a pretty weak break on there. It's pretty much right at that level. I did see there were some trades during that back testing that taking those, even though it barely broke, worked out. I don't like that it's that close though. And you got the high wicks. So that's the only thing. I might be the only one that took that. Around the world, I might be the only one that took that. Wouldn't that be funny? Could be. Again, I'm not looking at highs and lows, so we're not looking at that. We're trying to trade this mechanically. Can someone come in when they get that alert? Again, you'll have to play around with it because I want my alert to actually go off when price closes above that line, not when it crosses. Or you're going to get Wix will alert you, and you're going to open up your phone and mess around with it, only to not be able to take a trade. So I may sit in the negative for a while, and that may have been, just not far of a break on that. But I'm going with the rules that I set on the back testing. So now we wait. I do recommend setting your limit order. If you're buying, if you buy, you need to use a sell limit order. As price goes up and approaches it, it will sell off 2 of the contracts. If you're selling, you would put a buy limit order. You have to do that instead of, if you're paper trading, if you drag the take profit, it will be for all 3 contracts. See how it's for all 3? And I don't want to close out all 3. I want to leave a runner on. Okay. So that's the only thing with your trading. If you can use bracket orders, you're going to buy 3 with your stop will say 3. Your take profit would say 3. So we don't want our take profit. We don't want to close all. We only want to close 2. We want to close 2, and then we'll move our stop. We'll move it. And I'm moving to the quarter mark. I'm not going to move to break even because that's just too close. So I have adjusted that rule. So not much, not exciting today. Any questions on any of this? Pretty simple strategy. Right now we're using it on 1. We're just doing Nasdaq. For me, this is extremely boring. So I've already placed trades last night, placed trades yesterday in the Forex market, on MetaTrader 4. Last night, I traded in TradingView, and it's out on the forum, discussion board, or Discord, sorry. Wow. So they're out on Discord. But got into several instruments last night. Let's see if we can go back. Where do I want to go? Not there. That's not. Oh, that is it. Sorry. Training screen. All right. So there's one of them, in gold. So I bought on the pullback. This is the open of the market. So we had a big move down, pullback. I sold in there. It went quickly down to profit after breaking this low, went down to profit level 5 from my entry. So that was 20 on. This was where I closed. I closed 15. So I closed 3/4. I'm big on that. I'll put on 20, close 3/4. In Forex, I'll put on 40 and close 30 of them. I'll close 3/4. So that was one of them. And then this was later on with those 5 runners. So there's where I closed the 15, my closed partial, to make sure I got a paycheck in here. Again, put on 20, closed 15, made sure I got a paycheck in case it turned around and reversed. It kept going. So that was my 5 runners, what they were up about 1,400. So that was one of the trade. This was on the Japanese yen. So the Japanese yen, I took the break here when it came down and broke through that low level here. So that's what I was up on that. And you can see my pending order there to close 15. So put on 20 and was set to close 15. And then this chart, I always show you two charts. So I show you another chart where it popped through. And notice that it wicked through level 2. So my pending order, and that's 1 to 1. So my pending order to close 15 was sitting here. If I manually wait for a candle to close past that, or if I manually wait for price to breach that level, I may not be quick enough to close out. And I may be hitting the button to close 15, and I close 15 up here because the candle, let's say it wicks down and wicks back really quick, okay? So you're hoping that you can pull the trigger quick enough. You're hoping that you remember that you're supposed to close 15. I would rather put on that pending order and just let it happen. If that's what I want to do, is at PT1, I want to close 15, well, then why not go ahead and set it in stone? Use a pending order. Use a buy limit in this case. Why not set that in stone, let it happen, if that's what you plan to do anyways? And then later it was in Bitcoin. There was a Bitcoin trade, 20 on, and it played with the PT1 right here. See how it went up and almost touched PT1? That was the stinking chart right there. And I was like, really? You're just not even going to hit my limit order? But then then a few minutes later, it actually hit it. And then stop, of course, was moved to break even. So those are just some that I did take last night. All right, so we pulled back in the negative a bit. So those were my trade outside of this. Now those are done in a different account. In this account, I'm only trading Nasdaq this week. So I went ahead and created a new demo account, paper trade account, whatever you want to call it, just for this, trading this week. Oh, yeah, the pending orders. So I'll go ahead and pop this one. I'll leave it up there for a second before and I'll put another one up here. So again, I have 3 on, and it doesn't matter. Again, I'm doing 3 this week on this test. The results I've posted in those 2 videos on Nasdaq and S&P. And tonight I'm going to run through, I'll run Dow. So tonight I'll take Dow Jones and I'll run it back through the same past month and do the same exact test. And I will do a video on that, hopefully tonight. And then, because these are quick, I'm just posting the results. I mean, it takes some time to go through and do that replay back test. Because again, I have to sit there like this and tick over one candle at a time and replay. And then just click a candle, nothing. Click a candle, nothing. Click a candle, it closes above the high. So on that candle, then I would place a trade for 3 contracts. Now in replay, it's different. In replay, you cannot set pending orders. So I have to tick over a candle, tick over a candle, tick over a candle, tick over a candle, and wait for the candle to close. And then basically when a candle comes up near that line or over, then I'll close. Because since I can't put the pending order on, sometimes it's a hair past, sometimes it's under. That balances itself out. So I'm okay with that. But that's the way you have to do it in replay mode. And then when it hits this level, then I go in and manually close 2 on the replay. And then I move my stop up to the quarter mark or to a break even is what you want to do. So I'll do that test on Dow, get that posted. So as far as pending orders, again, we're not trying to close out all of it. I like to let my winners run, okay? I like to let my trade run. I like to leave a runner on because you have to think the market does move in waves. That's what we're seeing. That's not the tool I want. So the market does move in waves, right? And who's to say if it's going to keep going up or down? It could come back down. But what if it runs way up here to level, 2, 3, 4 for the rest of the day? What if it runs? Now, this is typically, we find this in other things like Bitcoin, gold, oil, platinum. Okay. You'll find that a lot of days it will run to those other profit targets. In our profit target tool, which is nothing more than the Fibonacci indicator that I changed, okay, is basically, where's our entry? That's our entry candle. I would take the fib tool and pull it from our stop, and I'll move it over here to right there to my entry price, and then always set it to the back. That's our typical profit target tool. And it's basically, this isn't something that, it's the Fibonacci tool. And basically I changed the settings in there. We have a 0 is the bottom, that's your stop. 0.5 is a half stop. So when it hits profit target 1, you're closing partial, you're moving your stop up halfway. You're cutting your risk in half on your open contracts, your runners. And then you have to label these 1, 2, 3, and 4 back and forth, because that's the way the tool sets them up. You can't just go 1, 2, 3 on down the line. But basically, that's all you have to do to set up that tool. And then, of course, I saved it as a template, and it just says trades. It's right there. But that's what that is. And there's a video on it, how to set it up and all, that I put together out there. So that's our typical profit target tool. Now, as far as pending orders, so again, we want to close out partial. We want to leave a contract on in case it keeps going. Now, I'm doing 3, closing out 2. And in the end of each of those videos, I have a little chart where I've done, 2 times this, 3 times this, and 4 times this. So some people, that's all you can trade with, 3 contracts, and you're closing out 2. Other people may want to go 6, 9, or 12. So I just put those in there just to show you the difference. Basically, you're multiplying whatever. Nasdaq over the 30 days did over 13K. That's doing these 3 contracts and closing 2 and moving a stop to break even. It was 13K, okay, during a month. Is that not great income? Yes. Okay. So is it going to do the same in the month of May? I don't know. We'll see. But that's the results on 3 contracts on and 2 off. To me, yeah, that's a great income for the month in trading. Doing the same thing every day. Same exact thing. We're not doing anything different each day. We're just doing the same thing. You're coming in at 10 o'clock. You're looking. You're waiting on a breakout, setting some alarms. Boom, we got a breakout. And then we're taking the trade. And then we put a pending order on. And then it's going to automatically close off 2 for me. I don't have to think about it. I don't have to do it. The thing I have to do is when it closes out 2, I need to move my stop, okay? So, and depending on the broker you're trading, if it doesn't have bracket orders, then when you close out 2, your stop will still say 3. So that's an additional step. If those 2 close out, you need to come in and, wow, okay. So that is the, we'll look at that. That's the Lux Algo alert going off for some reason right now. I don't know why it just now went off. So I'll have to look at that. I don't think it's got a buffer. And when I say buffer, I'm talking about X amount of ticks away from the higher low. So again, make it mechanical. So how you add the pending order, and I'll leave this one on, but let's say we had on 6, we close out 4 here, and we want to close out 1 more up here. So again, if we buy, okay, we're in long. If we buy, to close out position, we need to sell. If you've bought, in order to close out, you need to sell. And a limit order is triggered when price is below it, comes up and hits it, it sells. Okay? That's how a limit order works. So the difference between a limit order and a stop order, this right down here is actually a stop order. It could very well be this right here. I could put on a sell stop down here of 3. And it's the same thing. These two, and this could replace the paper where I pulled down. So, and again, that's part of why I did a paper account for this week, is one, to demo trade it so you guys can see how it's done, but 2, you can see how much risk we're putting up. Okay, you can't do that with this stop right here. Okay, so if I'm trading through one of my Trade-Evade accounts, this is what it looks like. You don't have orders to drag down. You don't have a stop to drag down. You place the trade. You guys have seen this. I placed the trade. Morning, Cupcake. So I'll place the trade, and then I come in and place a trade for a stop order. Okay, for 3. So you don't get to see the price. You don't get to see, if I move that up, you don't get to see how far, how much risk we're putting up. So again, that's part of the reason for the paper trade as well, because I can quickly, after placing trade, drag this down to the stop level, and you can see that we're putting up 276 on here. Okay, risk initially. Now, again, with the ORB strategy, a lot of times you're upside down. If you're taking an entry and it's close to the high, like what we got in, then 1-to-1 is on the line as far as the stop's concerned. If you look at the high, the stop is halfway back. The 1-to-1 is that distance between the high and here. So if you're getting in past the high, you have to make that decision if you want to move the stop up and capture a true 1-to-1, because right now you can see it's lopsided. And that's what I saw when I first started looking at the ORB strategy, was like, man, I don't know if this is going to work. Because for me, it was like closing partial is not even at a true 1-to-1. Okay. The true 1-to-1 would be this right here. Here's our stop. There's our entry. And there's the true 1-to-1. If I wanted true 1-to-1 today, I'd move my stop there. And then that would give me a true 1-to-1 right now on my profit to my stop. And we can leave it up there. But that's your true 1-to-1. So as far as placing the trade, we would have to sell. So I sold 2 here. Let's say I came up and I just wanted to sell at the second level. So this is level 1. Level 2 is about in here. I would come in and tick this, create an order, because you'll see here it says sell 3 limit. Well, I don't want to do that. I'm already, by the time it gets up here, I've already sold off 2. Okay. So I need to sell 1. So create an order, come over here and hit sell, limit, and put in 1. And there's your sell limit. So as it sits right now, if I leave these on the chart, and we could put this back up here. Let me put my, again, this is the fib tool, just modified. All right, so I can move this sell 1 down here. So right now, my stop's down here, halfway between the high and low. There's our entry, and then the take profit here of 2, closing at 1-to-1, and then closing the last at 2-to-1. So but that's how you put the pending orders on. So typically I'm doing 20. So typically I'm getting in with, say, 10 or 20 accounts. So if I get in with 20, I always like to close 3/4. Okay. So if I get in with 20, 3/4 is 15. So I get in with 20. If I would have got in with 20 on this, I would be closing 15 here. 15 contracts come off. Then I have 5 left. I'm going to close 3 here. And then I'll close 1 at the next level. So for me, it's 15 come off. There's 5 left. There's 3 come off here. There's 2 left. 1 comes off up here. And I have 1 last runner that I will just keep moving my stop. Because as it hits these levels, we move our stop. Does that explain it? Okay, cool. Now, you get alerted. So when it comes up and I get an alert that the order was triggered here, I'm going to open up my charting. And right now I'm sitting here. And but if I'm not, if I was working, I'd go take that bathroom break or coffee break, whatever you got to do. So if I get an alert on my phone that an order's triggered, unless you can open your phone at work right there, for those that are trying to, trade while you work, you got to go somewhere, bathroom, coffee break, whatever. I got to run and get another coffee. And when you run and get another coffee while you're walking, you're opening your phone, seeing that order's been triggered, and you would move your stop. Say to lock in or to move it halfway. Now you have half the risk on that last runner after the two's closed. So we don't have to set up alarm lines on these levels. The only alarm lines you need is the high and the low. I'll have to look at why, because we did have this, we did get the alarm trigger here, and that was, that's on the indicator alerts itself. And I'm not sure why it came so late. That was triggered at 10:30. But by 10:30, it had clearly already broke out of that. So I'm not sure why that triggered so late. So it does work. Remember yesterday and the day before, I was looking and going, man, it's not even working. So I took it off the chart. So today I wanted to put it on and leave it there. So it did alert. It alerted at 10:30, which is right there. So again, I'm not sure why it waited to trigger there. I mean, this indicator is the one that's marking the high and low, so it should have known price was breaking there. You know what? I'm wondering if it's looking at a... Oh. I'm just thinking here. I'm wondering if it's looking at this half hour. But no, that's your time period. That's what we're using. So that's the length. And I don't use this one, this half hour, because this half hour by default, if you don't check custom range and set this up yourself, it's at 6 p.m. It's at the new day. Is where this indicator actually starts. So you have to come in and check this box. If I uncheck this, notice that it's out of whack. Again, it's because it's looking at the new day. So I'm not sure on this. I was thinking originally maybe it was... because it triggered on a half hour. Surely it's not watching 30-minute candles for that alert. I don't know what it's in. So now we're down. So we didn't even hit take profit one yet. We were up in some decent profit for a little bit. This is trading up and down. We may end up with a negative trade. But it definitely broke through. We don't really have... let me take this off. Trend lines to draw. If I noticed that if I draw a trend line from... I'm going to take this alert off, though, on the bottom. I'm going to leave the upper alert on here. Or no, that took them both on, didn't it? Let me sweep these out. The log will come in here. I won't turn these back on. And I deleted it lower. So this is the upper alert right here. So I'll turn this back on if price goes below it, is what I'd want to do. But we're going to be here watching. So if price goes below this and comes and takes this out, I'd be looking for another entry and I'd turn the alarms back on. That's what I did at that point. So again, what I started to mention was if I take, and let me do this. I don't know why I don't have that. This low here, and I have this low here. If I was to draw a trend line across those, prices already broke through. So it doesn't mean the move up is done. And I covered this, I think I pretty much cover this every time I'm in here. So that would be our trade line up if you're drawing trend lines. And I'm not trying to get a bunch of stuff on the chart because I know we're trying to keep it simple. That would be our trade line up. This is something I always talk about. Your trend lines are linear. Well, price always moves. It doesn't move in a linear fashion. It may trend up, but it doesn't always move up on a straight line. So that's something you have to keep in mind. On a break of a trend line, just because it's breaking a trend line does not mean that the bullish move is over. Okay? It could still creep up the backside of this line. So what you have to watch for is we would watch for lows and highs. So we'd come in and mark these lows and highs, and if it comes down and breaches these lows in here, then what's it doing? If it comes down and breaches this low in here and pulls back up, it might be forming bearish structure, which means a deeper pull down, which means I'd get stopped out. So that's something to keep in mind. Actually, we'll leave this line on, but we'll take that off. All right, so all it's done so far is it's pulled back. Is it going to bounce here off of this high from the start of the session? As we look to the left, because we looked to the left this morning. I'm always big on that. Look to the left of the chart. You know, one person one time after a video, man, why are you always saying look to the left? Well, that's your historical data over here. This is what it's done in the past over here. We look for old support and resistance levels that are from over here on the left to hold up over here on the right. Okay, so that's what we're looking. We're looking and watching this pull down. I love that we're seeing long wicks. Is it going to bounce off of this level? Okay, again, we're looking over here to the left. There's your level. Is it going to bounce off that and continue up? That's what I'd love to see. I don't know if that's what it's going to do or not, but that's what I'd love to see. But we also have a level right back here. Does it go deeper to test that level? And that's from this high. Well, what else is that? That's also the high of our opening range. Same price point. So we're looking to see if that old resistance here, okay, this is old resistance here, because did it not pull up to that price point at around 10 o'clock and then just pull back down? So it held up as resistance over here. We're looking for that old resistance in the past to become future support over here. And we'll see if that happens. This is echoing, guys. I shouldn't be getting a feedback. Is that still happening? Okay, it's not. Okay. I don't know if sometimes that has to do with streaming through YouTube or not. I know it's like about a 10-second delay, we figured. And I'm on fiber optics here, so we switched over. I don't know when it was. But we switched over to fiber optics from cable, so. We've got a great, not only download speed, but upload speed. It's matching. So been very happy. When I record, if I record a video, it is about 9 to 10 gig video. And when I upload to YouTube, it really doesn't take maybe half an hour if it's that big. It takes them more time to process them. So with the lives, we don't have that. With the lives, it's just 10-second delay, boom, it's there. When I do a recording like I did on the S&P and Nasdaq for these, those actually take some time to process. I know the other night I finished the recording, I think at 2 o'clock, and I think at 3 or 3:30 it was because I stayed up, not to watch it process, but it was still processing. I'm going to take a peek at the others. We got some time. We're not doing anything. So we'll take a peek at what else is happening over here. Let me put this on the DOM so I don't have these. I don't actually place a trade accidentally. And I do want to close off. I'm going to close off this one limit order here because I don't want to close out the whole trade if it pops up there. Okay. So looking at the other four, nothing on Dow. You haven't taken a trade yet on Dow. I like that. It hasn't gone anywhere. Staying in that range, staying in the top half of that range. Is that tradable? You can try. Now, Russell would have taken you in. So on that, on that tracker, that spreadsheet I put together on the tracker. So I will be marking Russell as, we took one trade, and right now it's coming back to the midpoint. So that's where our stop is, right? So if it hits that, and this is what I did on the back test too. So again, if it comes back and hits the stop, that's a losing trade. So right now it looks like that's what might happen on a Russell today. So I will be marking that. So that'll be a losing trade. If it pulls back down, we would sell again. If it pulls up through the top and closes past, we would buy. So do we end up with one losing trade during, on Russell? Or would we end up with two? And that puts us into, we would have to redemption trade. I don't have to watch Russell all day. I can wait till 4 p.m. So at 4 p.m., I'll zoom out into each one of these and look and say, okay, we took a trade short Russell. It got stopped out. And then we didn't get a chance to re-enter. It doesn't close past the low again, doesn't go up and close past the high, doesn't give you a chance to trade again before noon, so we would have to redemption trade this. We would have to come in and look to trade it between noon and 4, and then does it break out and run? Well, we already know that we have FMC this afternoon, all right? So we got the Fed funds rate coming out. We got 2 o'clock. So we know that things are going to move. We knew, or you should have known, coming into this morning that things might just move sideways all day until we get around 2 o'clock. Then you might see some where it starts moving right before, and then all of a sudden it'll take off one direction or not. So if I was trading, sometimes I don't trade in the mornings of FOMC. I'll wait till before FOMC. I'll do other stuff in the morning, and then right before FOMC, look for an entry, or right after it triggers, and then dial down to a 1-minute chart, or sometimes I even go down to a 15-second chart to look for an entry and scalp that move. So for me, this wouldn't be something I would typically trade. But for our testing, it is something that I traded, all right? So, and then as you look at ES, well, that broke out the top, closed above. Right now, it's about stopping out. And I don't know why I still have that on a 15-minute time frame. So ES almost stopped out here. So you'll see, though, look at how it barely broke out the top, and it's just been riding along it. So again, this is what we're getting before FOMC. So should we have placed the trade? For me, no. I wouldn't have traded. Not these. Okay? I'd be in the morning, I'd be looking at gold, Bitcoin, and oil, and platinum, those four. And it would be around 8 o'clock. that I start looking. No later than that. So it looks like we're going to take a loss on this as we're pretty close. It's getting close. Now, if you're wondering, well, if I could have put I would have had my stop at the quarter stop area. You'd been stopped out over here, probably on that wick right there, or close to it. So again, during the back test, I saw way too many times that if I put the stop at the quarter stop area, it was stopped out only for it to keep going. So what we're running into is just that pre-FOMC movement. That's what we're running into today. Because if you look, everything's flat, all four. So we got stopped out. So I have to close that. Because again, they're not bracketed together. So the trailing, on the question on the, I don't know if I could pop that in here. And I'm not sure, the pop out should be working for you guys. So why is that not working? I don't know. For some reason, I'm trying to figure something out, guys. It's not working in here. Let me see if I can fix this. That should have worked. There it goes. For some reason, when you guys are typing and put something in the chat, it should pop up here on the screen where I can see it easier. For some reason, that didn't happen. So let's see. On the prop firms, or the prop challenges, the trailing drawdown will get a lot of people. You can't leave your stops out. So we're getting that push. I need to watch this because we're getting that push to close. Now, again, the rules that I set up for myself is if it breaches that low and closes past the low, we're going to get in. So that's just the rules I back tested, and that's how we're testing it this week. So we got about, this is a pretty big candle because we've got 2.5 minutes left on this candle. So I don't like that. We'll see where it ends up because we got a full, 2.5 minutes left. So we've had a huge move down, recovering and getting to the bottom of that zone from this morning, or that breakout area, that range. So again, on the prop firms with the drawdown, unfortunately, a lot of times you cannot leave your stops out to, and give it a lot of room. A lot of times you have to trail your stop kind of tight. So that's just something you have to watch. What I recommend is if you're trading through, say, Apex, you would have it locked into Trade of 8, but you're trading through Trading View, like this is how I trade. I always have Trade of 8 open, and I'm always watching the trailing drawdown. It is always on my screen. I'm very aware of it as I'm trading on the prop accounts. You have to be. Get a PA account, and once you build up equity in that account, your trailing stop stops moving, and then you don't have to worry about it. So you just have to get past that, evaluation phase, which evaluations are pretty easy to take. And then when you get a PA account, again, I don't recommend, I recommend leaving funds in that PA account, getting it built up to where you don't have to worry about that trailing drawdown. Because, if you get up to that minimum that you need to do a payout and you pull a payout, well, now you're stuck again with a tighter tight drawdown. You just created a tight drawdown for yourself by pulling a payout. So it's like a catch-22. And then, of course, then you blow the account, and then you have to get another. You have to go all the way through it again. You have to do it, start over, and get an eval and pass that first, and then go back. And that's what I did with my son. I pulled very little out on his first payout because I told him we need to leave money in there to build up. I said, do you want to blow this and then have to create or have to go through another eval? Well, for him, he was using my strategy, and he passed the eval in like 2.5 days. He was just taking the buy signals, sell signals, only trading gold. And okay, so we have that. I'm going to sell because that's what the rules I created, and that's what we're testing. Obviously, I'm not going to go to profit target 1. We need a bigger target. I'm just going to come down, put an order in. So we would have to do a buy limit in this case. And we'd do a buy limit of 2, and then we could look how far. So again, we're going to have to set it up a little deeper. If it pushes down, it's going to pull back in here somewhere, guys. I don't expect it just to keep dropping. Now, if that would happen, that would be great, but I expect it to pull back before if it even goes on. So this may be our second losing trade. If that's the case, then I won't trade anymore this morning. It will be waiting for FOMC to trade. But back to the drawdown, they're tight, so you have to be very aware of it. So definitely keep trading trade of 8 open if that's where you're watching your drawdown, because there's nowhere to look at it in trading view. And then I wonder if it'll pull maybe back to here. Back originally where I had it. But we'll see what happens on this. I don't care, and guys, you have to get used to this. I don't care about the drawdown or the negative we're in right now. I never care about this. You have to get used to not even caring about that. It's this. I threw up $400 for the trade. I don't really care about that. Didn't care about it over here. I can't remember the exact number. It was a tighter, we got, our entry was here, so our stop wasn't the 390. I can't remember what it was. Whatever we got stopped down on that. 280. So we lost 280. You can't care about that. I don't need to care about what I'm putting up. Don't need to care that this is 390. Didn't need to care that that was 280. Don't care if it's 600, if it ends up 600, because what we've done is looked back through the last month, and by keeping our stop there at the halfway point, by taking the entries when it closed on the outside of the higher low, using that same system every single day, every single trade with 3 contracts, Nasdaq profited over 13K in a month. So again, I don't care that we lost the 280. I don't care that we put up 390. That's the way you have to be. You have to look back and go, okay, systematically trading this way, taking that close past and selling, the close past the high and buying, putting our stop at the halfway point, systematically doing that over the last month, it brought in 13K, 73 or 5% win rate, whatever it was. So testing those results, your mind, you need to relax a little bit and know that it's been tested. I've tested it. This is the results. So I should be good to go. And that's how comfortable you have to be with it. You can't, now I know it's a little easier said than done if you're trading live money, or even if you're trading prop firms and you need a check. That's the worst situation to be in, where you actually need funds to live. because then you're trying, you end up placing trades that you shouldn't trade. You end up, hey, I made $1,000 this morning, and then you give back 800 by the end of the day, because you're like, man, I made 1,000. Let's see if I can make 2 or 3 or 4 today, make up for a whole month's profit. So for those that trade that need the paycheck, it's kind of like a double-edged sword. It's great, you can get funds, but you'll take a trade or two in here, and then you're on top of the world, and then you want to keep trading the rest of the day. Well, that's not what the market does. If the market breaks out and gives you something for the day, and you take that, well then, when you start looking for other trades, you end up, and I'm not sure why that changed to that, you end up losing it back normally. So we just hit PT1, or in this case, what the tool's marked as PT1. Again, it's marking it off of the halfway mark. So if you look and we pull our stop tool from the halfway mark, and I got the magnet on. Let's shut that back off. From here, the halfway mark, okay, between the zone and the bottom of the zone, you'll see that level 2 here, only because the levels are marked 0, 1, and 2 on the fib tool. That second level, which is target 1, lines up with that. So that's your 1-to-1. And then we should see a line pop up. There it is. It's 1 and 2 right here. That level 2, which is right there. So I'll leave that line on. I think it has to have a candle close past it, so it may stay on here, that level 2. So it doesn't just plop them all on like our tool. You know, when we use this tool here, it plops on 22 levels. So we have 22 levels of target on that fib tool, because I went ahead and maxed it out. The reason why I maxed this out, when I first set this up, I think I only had it going to like level 6. And then I was in something, I can't remember. I want to say it was Bitcoin or gold. And it kept just breaking levels. I had to keep going into the settings and adding levels. And so then I just went, okay, I'm just going to set the whole thing up. And again, just went 0 and then your half stop and then 1, color those red, and then it's 2, 3, 4 all the way down to 22. But I had to do that because it kept breaking levels. We got to hurry up and wait again, right? Sorry, I'm trying to fix something over here. Not sure what's going on. Nasdaq. Nothing special. It's pulled back. Waiting on that next push. Again, always be aware of your highs, lows. We'd mark the low in here. We're looking for it to break that level. Because if it doesn't, if it fails to break this level and comes back up to break the high in here, then it may be pulling deeper back, which is not what we want to see, but it's what could happen. Again, this is before, I almost said non-farm. It's before FOMC, so. $2004 for me. Forex euro dollar was the first thing I ever traded. It was the Forex market. One instrument, learned that one instrument, and then added two. All right, so it's popping down to our buy limit. Like to see it get there already because we can relax, right? Once it hits that level, then we can move our stop. And again, I'm moving mine to the quarter level. And for me, that quarter level is basically the half loss. I want to move it down to the half loss area. So if we look at where our stop is and our entry is right now, the half loss would be right here. And we can mark that with that line. But that would be our half loss level. That's where I'd want to move my stop. That's if it gets to our limit. So when I back tested this, I solely back tested this that when a candle closed under the low in this case, that I pulled off part of the trade at PT1. On this one, I decided to go for a little bit more just because how far that candle moved. That may come back to bite me. It may nice trying to get down there. It may not get down to that level. So we'll see. If it doesn't, if it plays around with this several times and then pulls back and stops me out, well, then I'm going to know that, yes, even though the candle had moved quite a bit past that low, I should have pulled profit there. So that still remains to be seen, but that's what's going through my mind. So yeah, I started back in 2004. It's been a long time. Had a back injury and I was down. I worked construction. I do have something I put together, but some people know my story if they've been in here a while. But basically, I couldn't do anything. I couldn't even stand or sit for 5 minutes, and both my legs would go numb. So I had bulging disc against my nerves, and I was laid up. I heard it in construction is what happened. So I had to find something else, some other way to make money, because I was couch bound. I couldn't even sit or stand. I mean, I was literally laying on the couch with my laptop on the coffee table. That was my day. And I was on there searching for something to do because we had bills to pay. My wife was working, but it took both our incomes to pay our bills to live. So can I say I'm grateful for that injury? I always kind of joke around about it. I still have back problems to this day. And in fact, I've been driving vehicles, and I have to take them on like a 2 or 3 day test drive because I have to see how it does, how my back does. So I just drove one about 3 weeks ago, and I took it out over the weekend, picked it up on Friday, turned it in on Monday. And the dealership knows that. They know that's why they know I'm serious about buying a vehicle, but they also know that I have to find something that is not going to hurt my back, that my back's going to be comfortable in. So they know that. So I'm grateful for that because they're working with me on that. So I take them out when I know I'm going to be driving. and I knew I was going to be going over to the next county over, looking at some houses. So I'm just grateful they let me do that, because the one I drove, it just, the first day I was like, man, this is killing my back. Second day it was okay. Third day it was okay. But overall, it just still was giving me problems versus what I'm driving now. So it's an issue. But if that wouldn't have happened, I wouldn't have ended up trading. So Candace, on that, I need to put that out there. I did put together something as part of the power course that I had way back when, and it basically goes over all of that. But for me, it's a little different because I found somebody in Boca, because I was living in Naples at the time, and I found somebody, I don't know if you've heard me talk about, over in Boca, that I paid to learn how to trade, and it was a lot. And so I'm also grateful for that, because I'm like you guys. I don't know how long you've all been trading or where your trading's taken you, but when you start looking at trade, you see stuff on Instagram. Now it's worse. It's worse for you guys than it was for me, because we didn't have Instagram and TikTok. Facebook barely been out. But when I went to look at trading, and the only reason I looked at trading is because I had a e-currency business. So it's like PayPal, where you have PayPal, eGold, eBullion, INT Gold. Some of those are used around the world, and you don't hear about them, like eGold and eBullion. They're not around anymore. They were shut down. So, but I had an e-currency site where I did e-currency exchanges. There we go. We're about to target. So basically, if you wanted eGold and you had PayPal, you could come into my website, and it was an exchange website where you would send me, $500 in PayPal, and I would send you, and I charged a fee, but then you get $500 in whatever, in eGold, eBullion, whatever you wanted. And there you go. So first take profit hit, and then I am going to move my stop to that level. So I'm going to put a little pass just so I can remove that line. Yeah, we can leave it there. So with doing that, I had someone talk to me about, they're like, well, why don't you look into trading currency pairs? You're already doing it. I'm like, no, I'm not. What are you talking about? They're like, well, you're doing that exchange thing. You're dealing with money, with different exchange sites, different, e-cards like PayPal and stuff, e-sites. And so when they mentioned Forex, I went looking. It was rough, because when I went out to look, back then, there was enough info out there to not know where to go. I didn't know who to watch, who to listen to, what advice is good, what advice is bad, what advice, I got one shot. It's like, you got one shot at this. It's like, what advice do I want to follow for the next year to become successful in trading? And you pick someone and you start off, and that's like, nope, pick the wrong guy. Let me go back to this guy I looked at 6 months ago. And then you start looking at him and following him. Then you're like, nope. Then 4 months have gone by with that guy, or 3 months. You're like, let me go back to this guy, or let me look around, see what else is out there. And before you know it, it's like 3 or 4 years have gone by, and you're still struggling. So I knew I did not want to do that way back then, before I even started. I just knew when I saw a bunch of info on the internet, I'm like, man, I don't know who to go to. So I actually found a guy that was trading actively, had other people trading for him, and was thankful for that. That was like another blessing, because if I wouldn't have, I probably would have taken 1, 2, 3 years fumbling around. So with that guidance and that training, I was able to speed that up and not go through all the hiccups in trading. And it's worse now. I feel so sorry for people starting out, because there are so many people out there that are trading. And back then I stopped doing this. So I actually, with his knowledge and trading or training, it only took me a couple months to become profitable. And then 2 years later, in 2006, that's when I found a group and joined it. And there was some software, and there was a friend of mine wanted me to test their software. I'm like, okay, so I tested his software, started posting in their forum, discussion board, which are non-existent anymore, because I thought about opening up a forum. And I'm like, nobody uses forums anymore. Everybody's using this Discord. So I was like, okay, I'll create a Discord account. Because back in 2006, that is what we were doing. So I did have a group back then, and we were trading together, and we were in a trade room trading. So instead of YouTube Live like this, it was actually just my screen share. It was a trading room, and we were trading together. It was fun. It was great. I loved it. But I was trading like right now. So I would trade from 8 in the morning, 8:30 in the morning to noon. We would trade. So I'd be in here right now trading. At noon, I'd get done. I go shower. I go to work, my wife's work, pick her up, take her lunch, drop her back off. I would go home and take a nap. I would take a nap till 5. She'd come home at 5 because she lived like 20 seconds from our house. She'd come home at 5. We would have dinner. We would talk. We would watch some TV. At 7 o'clock, I was back online training, and it was from 7 to 9. It was 2 hours every night. And this was Sunday night through Thursday night. So 5 nights a week for 2 hours, 7 p.m. to 9. I wanted to go 6 to 8, but there was a girl in Hawaii. So with her being in Hawaii and that time zone, I went 7 to 9. I talked to her and I'm like, is this okay? So we pushed it back an hour, 7 to 9. So 7 to 9, I went through training. So when between 5 and 7, I kind of prepped a training for the night. This is like every day. Spent time with the wife, about 15 minutes, half an hour, prep my evening charts. And then from 7 to 9, I'd go over the evening charts. We would actually trade some then. I would go to bed, go watch TV with her, whatever, talk. We'd go to bed at 10, 11, sometimes midnight. I would get up at 2:45 a.m., and I would trade from 3 to 5. At 5 a.m. in the morning, I'd go back to sleep for 3 hours, get up around 8 to 8:15, and get back up and do it all over again. So that was my life every day. So I did that from 2006 to 2007. Tyler was born. So now you bring a newborn in, life's getting a little busier. I had to scale that back some. And unfortunately then, over time, over the years, it was just because we had no other family right there. It was just the three of us. My wife, Tyler, and I. So I was spending a lot of time away from them. So we made the decision to scale back. And that's when I had to stop doing the group, the training. But that was really went on till 2010. It wasn't stopped. So that was from 2006 to 2010. And it was pretty much that whole 4 years that I was doing that on and off. I scaled it back some after Tyler was born. He was born in 2007. So I scaled it back some, but we kept going. So it was a great group. We had some people from overseas. I had some people from London that I trade with. And I still know them. We still talk. I don't trade the London session a lot anymore just because of the life structure with the kids here and everything. And I've got to get some sleep, and I've gotten older. So the only difference in a trade room, and there's really not a lot of difference. This is kind of about the same thing. I had my charts up. I was actively taking trades. A little more than this. You guys know, you've seen where I've got 4 to 6 instruments up, and I'm taking trades on multiple instruments. That's pretty much what it was. And then other people are like, "Hey, can you look at the pound yen, pair?" And I'd pull up that screen. One of the guys, Jim, and he lived in Cincinnati. He's the one that was like, "Hey, can you look at the pound yen? Have you ever traded it?" Nope. I'm like, never have. Because if you look at the euro and the pound tends to move further. It's like looking at S&P and Nasdaq. Okay, the euro would be compared to S&P. The British pound would be compared to Nasdaq. So they move similar fashion, but Nasdaq and the British pound, in this case, compared to the euro, the British pound moves more, moves further, whips back and forth a little bit more. So it's the same comparison. So I had traded the euro and the pound. I had traded the euro yen pair, but never the pound yen pair because it cost more. Just to place a trade, it cost more to place that trade. So I hadn't even looked at it. And he's like, "Can you look at this for me? This is what I see." And so I went through and evaluated it. And he goes, "This is what I see, and it's based on your strategy." It was based on my strategy. Not this strategy, sorry, but looking at the highs and lows and the 4 hour and 1 hour, dialing down the charts and all that, looking at support resistance levels. And, he went through all that, and he's looking, he's like, "Hey, have you ever traded pound yen?" "No, I haven't." He's like, "Can you look at it?" So I looked at it, and this was during the Asian session. And I'm like, "You're right, this is set up." So I went ahead and took the trade. So that's what trading in a group helps you to do. And that's happened several times here in our Discord where, like gas, platinum, MC was big on platinum. And I hadn't traded platinum, hadn't really looked at it much. I'd glanced at it here and there. So as he was trading it every day, I'm looking more and more. And then sometimes I'd see a good setup and see an entry, and then I'm taking it. So something I wouldn't have even looked at before. So that's what trading in a group actually helps you do. You might only be focused on one thing. But then someone comes in and says, "Hey, look at this. This is set up the way we trade. This looks like a good entry to me." And you're all over it. Natural gas. I've gotten into some trades on that. Not because I'm looking at natural gas. I don't look at natural gas every day. But someone in the group had mentioned it about natural gas and how it was set up for them. And I'm looking going, "Yeah, this looks like a good entry," and taking the trade. So it allows you to take some trades that you normally wouldn't. And hopefully, of course, those are profitable trades and not losses. So nothing much now. We're getting big wicks on either side. So you notice the 2 red candles there, some big wicks down, and then so that's that. You're selling pressure, but the buyers are holding it up. Same here. And now we're getting where we got, the buyers trying to push it up, the sellers holding it down. So almost the reverse action from over here. So I don't know what's going to happen with this. We'll see. Again, we have FOMC later. So it may sit sideways till then. I was lucky enough to squeak out the profit. What did we get? We're only up 5 now because of that first loss. So we had a 280 loss and a 190 gain. So let's mark those. I guess I could mark it. I'm going to mark it at the buy signal and sell signal. So this one was our 280 loss. And then so far we've got 190. Whoops, I need to change that plus sign down there on the other side. So we have 190 so far. We got a mark so far because we, if I could type, we still have a runner on. Okay. So that's what hopefully the runner is going to do for us. Hopefully it'll gain back the rest. So on the week so far, it's not all that great. We're only up $5, but it's due to losing back here. So we started off the week in a negative, so not looking good so far. Let's go back and look at that. So first trade of the week was a negative 319. And then the second trade we took that day was positive 117 with the $7 runner. Ain't that great? The next day, this was that was Monday. 2 trades Monday. 1 trade Tuesday. Partial we closed at 197, and then the runner at 94, and that was the only trade of the day. Today so far we have negative 280 and 190 locked in with the runner still on. So all I can hope from this is that, because, you know, at 12 o'clock we're coming up, we're going to end the stream. I'm going to leave the trade on till 4 p.m. and close it out. But we will see what happens at FOMC. Since I'm in short, what way do you think I hope it goes? Well, I hope it goes down. So I don't know. If FOMC pushes this down, then that'll be great on the day for us. Not just mediocre like we're getting now, but a great day. Right now we're looking, we could take this low we actually broke here, candle close. So I'm going to mark that wick down there. But basically it's sticking to this candle close area right now. So we'll see if it breaks that and moves to the next PT level. So I'd love to see, let's look at the others. S&P first trade would have been a loser. The second trade, it looks like that wick is a little bit past. I know you can't hardly see it. But as I look, it looks like that wick touched the PT1. And I would have used PT1 on this because as you look at S&P, that where it closed, candle closed, was not really that far from the low. Okay. So like on Nasdaq here, I fudged that order out. Remember the order was, wherever the order was. Why don't I have that on? I shut it off when I was back testing the others. There we go. So they're in here at 19,790. It was that 1-to-1. So wherever the stop was here, it was at the 1-to-1. Yeah, I gotta watch it because if I click this near here, it'll reverse. I've had that happen, guys, where I've went to draw with this tool and come down here and accidentally reversed an order by trying to drop the tool on the chart. So you got to be careful. So we closed out here, right there. So not true 1-to-1 on it. So it hasn't hit level 2. And of course we move our stop to protect some of our loss. So if we're looking again at S&P, well, let's go back to S&P here. S&P first one loss, second one, see how it just touched that line? So you would have got in short, profit target here, you would have pulled your stop. So your stop would be in here at halfway between your entry and the original stop. So that would have been okay, but the first trade would have been a loss still. So if you traded S&P this morning the same way, the second trade has covered some of the first trade's loss. So you can't be, I don't know, for lack of a better term, skittish. You can't have a fear of getting back in. We're taking every signal. We took the buy. You took the buy, you took the close. It came down, stopped you out. You took the loss. It gives you a sell. You take the sell. That sell profited. You can't hesitate and wait, because if you hesitate and wait and say, well, I don't want to get back in, you start seeing this green candle pull back and it pulls way up here and you're going, woo, great. Glad I didn't get in. It's going to reverse. only to see this long red candle, and then you're like trying to get in on that. And that's a worse location to get in on than right here. So you have to make the rules up and say, this is it. These are etched in stone. This is what I'm doing. And that's why when it comes to taking partials or closing off your trade, use a pending order in the opposite direction. Because if not, we're emotional beings. You might not close that off, okay? Oh, as far as the back pain, yeah, I don't either. Now, for me, one of the biggest things, too, was I was trading the euro dollar and 15-minute time frame, and I was risking, at first I started risking 100 per trade, shooting for 200, and then it was like 200 per trade, shooting for 400. But the biggest thing was, for me, and again, since we're emotionally driven, and that's what you got to get away from. In life, it's okay. In business, it's not okay, for one. And in trading, it's not okay. So you get into a trade, you put up $100 risk, and it moves up, and you're up 150, and you're up 200. Now, you said to yourself when you came in and sat down to trade that your target was 200. I want to risk 100 for 200 for the day. That's it. I want to do that every day for the rest of my life. I want to make a living at that, 200 per day. Because 20 trading days, that's 4,000 a month. So you say that to yourself. I'm going to risk 100, shoot for 2. It gets to 200 and you don't close your trade. Because here's what happens. You see that profit or you see ticks. Doesn't matter. You can try and fake yourself out and put ticks on the chart. Ultimately, you know X amount of ticks equals each $100, $200, whatever you're up. So your mind knows. You're just trying to play that trick so that you think you're not thinking of the dollars. We're not trading for dollars. I'm trading for dollars. I'm here to trade for dollars. I need a paycheck at the end of each week. I like a bonus check at the end of each month. That's where runners come into play. I like that. I need that. I got bills to pay. I got a family to feed. College is coming up. Cars to buy. We already bought one. The other one's going to be driving in a year and a half. So I got another car coming to buy. And then, of course, one for myself that I need now. So that being said, I need some funds, right? That's why I'm sitting here. That's why I'm trading. So what would happen is you'd get up to 200. You risk 100 to get 2. You're up 200 and you say, man, it's already moved that far. I want more. I want to let it go. Let's let it go. Let's see if it gets to 300. If it gets to 300, I'll close out. It goes up to 300. Man, okay. I'm going to let it go. I'm going to let it go. Let's see if it gets to 400. And you may move your stop up a little. You may move it to break even. You may not move it at all. Because you're on the 15-minute chart and you don't do anything and then it pulls back. Or it just goes to the 200. You're risking 100, 200, and you say, man, I'm going to leave it on. Then all of a sudden it pulls back. Now you're only up 150. Then it pulls back. You're only up 100. But you're saying to yourself, surely it's going to bounce. If you start saying to yourself, well, this should work. It probably will work. Surely it's going to turn around. Surely it can't pull back further than that. Guess what? Yes, it can. And yes, it will. So if you find yourself start saying stuff like that, that drives me nuts. Well, surely, because I had traders that would trade that way. And it's like, who's Shirley? I was like, who's Shirley? I don't know Shirley. What does she know about trading? One of the guys in Florida was big on that. Well, surely it's going to keep going. Surely it's going to bounce here. There's no guarantee. So when you see profit, you need to take some profit. So I got tired of that. I got tired of being up $100, $200, $300, only to see it come back and stop me out. Again, part of that was because I was on a 15-minute time frame. So I'm waiting out 15-minute candles. So I dialed it down Because I was like, I got to find a way. I'm up 200. Yes, I want to see it go to 3, 4, 500 for the day. That'd be a great day trading, right? Risking 100 for it to go up to 500 or 600 or 700 or even 1,000. That's a great day. But the problem is that's not every day. It doesn't move that way. So I needed to figure out, how can I get some of this profit? And that's where I was like, I need to close some off. So that's when I figured that out. Let's close part of the trade, move our stop. Either you got the option of leaving your stop where it originally was, or moving it up to the halfway to break even, or moving it to break even to cover. And you won't lose anything against your gains. So that's where that whole thing about closing partial and moving your stop to protect, or moving your stop to protect half your risk on your runners came from. And leaving the runners on, so those days that they do break and run, you're capturing more profit. Now, it was easier in the Forex market because things tend to move further and they break and run more often than what we're seeing here, or even in the indices in general. Okay, you just don't see them break and run as often. So you look at the 30-day or the 20-day time span, you look at the month, and you look and say, well, how many times has it broken and ran? So with this strategy here, or this indicator on the chart, let's see, I shut off historic view on there. I got to go to one that actually created a buy or sell signal. If you turn on the historic data, it's easy to see on anything that we go to. But you can pull up a chart and easily go back and scan back. As you're looking back through this, just look at how many days here's one. Here's one where you have a breakout, and look at that. Here's 4 o'clock. So between the breakout and 4, it moves quite a bit. Here's one right here. Between the breakout and 4, it moves quite a bit. Okay? Then you look at other days, like here, you took a sell. It looks like it did hit PT1. So you got a small profit. So you didn't trade in the afternoon. That's great. You're not messed up in this stuff. Okay. Here's one where you took a sell. It went to profit target 1 and 2 and broke through that. Well, you'd close 1, you'd move your stop to break even. And then when it closes past profit target 2, you're moving your stop to 1. Some people may not even do that. Some people may just close their last runner at profit target 2. Because as you look back and you're looking, this one doesn't break and run. This one doesn't break and run. So it's real easy with an indicator like this on the chart to see that here's a buy that came out right before noon and actually went, okay, and hit PT1. But you look going, they're not really breaking and run. And 4 o'clock, you're closing. If you're prop firm trading, you're closing, right? Trading through props. So that's easy to test. This one here breaks, only goes to PT1. Okay. This one goes up, hits several PT targets. This one's marked an X because that's where the stop was on the pullback. I evidently had that still on from testing. So it's easy to go back and, put that on the chart and test. To go back and look. So that being said, not a lot of runners are going to pan out on the indices. Okay. So, but that's where the close partial took. I will tell you, there was days I had a guy that I've mentioned his name before, but in Florida, he wanted me to open an office so we could trade together. I don't think he really felt comfortable coming over to the house all the time. And so I was like, I don't need an office. So he's like, well, I'll pay for half. So I did. We opened an office. Just so basically we can trade together. But then I started having other people that I knew from like up here in Ohio that was trading that would actually come down to Florida. It gave them that business trip, right, to come down to Naples, Florida. So they enjoyed that, and then we'd sit and trade. So, but I remember one day specifically where we traded at 3 in the morning, 3 a.m. We took a trade in the London session. Okay. What's the first thing you do when you wake up in the morning? It's not brush your teeth. It's not get your coffee. It might be turn your coffee pot on, but you're going to go check your trades. For me, first thing I do when my alarms go off in the morning is I go wake the kids up, and then I go back and lay in the bed until I got to get up and drive them to school, and I will check my charts and see what's going on. So you need to check your charts. So I checked my charts like 8 o'clock, checked it, and I always got down the office somewhere between 8 and 8:15 because 8:30 news that comes out affects the Forex market a lot more than it does other instruments. So that being said, I wanted to be in my chair ready to trade before 8:30, okay? So 8:15 was my 8 to 8:15 get to the office. So I checked the trades. Everybody in the group took it. We all took it together. It was like 3 in the morning we're in there trading. I think it was like 3:30, 3:40, something like that. We took the trade, and so everybody was in it. So get up in the morning, check it, and I'm like, cool, everybody's up. Everybody should have closed partial because that's the way I taught them back then. Put on 10 lots. It's called lots in Forex, not contracts. Put on 10 lots, close 8. Same thing we're doing in here. We're just doing 3 and closing 2. So I would put on 10. So if this was a Forex trade, I would have put on 10. I would have closed out 8. Okay? So we'd have more profit, obviously, locked in for the day than what we have. So put on 10, close off 8, and move your stop. Either to halfway to break even or to break even. It's your choice. And as far as it moved, it was moved to break even because it moved quite a bit. So I do that. Close out partial. Actually, I had a pending order to close out 8. So it had closed out. My stop had modified to match the 2 runners. So what I had to do in the morning when I got up was move my stop. I moved it to break even and get ready and head to the office. So I get in the office. Ed comes strolling in there like after 8:30, and he knew that at 8:30 we had U.S. news coming out. 8:30 every morning. I don't know why I couldn't get through his head. He's an older guy, retired. And news. We got news every morning. So you would want to be at the computer before news because it's going to affect your trade. Because we traded, at 3:40 at night, in the morning, a.m. So he comes strolling in there like 8:35. Hey, how's it going? I said, great. I said, you had a great night? Everybody had a great night? And he goes, yeah. He goes, I was up this morning. I said, yeah, everybody was up. That was good. I said, so you locked in more than you needed. He was one that he wanted $4,000 a month. Because that's my first question I always ask people. When they say, how much can I make a month? Well, how much do you want to make? How much do you need to make? Let's start there first. Let's take care of what you need. Let's take care of your needs, and then we'll go after your wants later. Because if you can take care of your needs, what you need to make per day, then going after what you want is just a matter of increasing your contract size or lot size. So his was $4,000 a month. I said, okay, you're only looking to make $1,000 a week, 5 days. You're only looking to make $200 a day. I said, how many trades? I always ask them, my next question is, how many trades can you take a day? Do you want to take? Do you want to take 1 or 2? 3, 4? How many do you want to take? He goes, well, maybe 2 max. I said, okay, so you're looking for $100 a trade. 2 trades, $100 a trade. That's it. To make $4,000 a month. I'm like, yeah, that's easy to do. You're only looking for a piece of the pie, piece of the move, piece of the market move. That's it. One little piece to get you that $100 per trade. So he only needed $200 a day. He was up over $300 on that trade. Everybody was. That was trading that size, okay, the 10 contracts. So everybody was up over $300 in the morning and should have closed out partial. Well, he didn't put the pending orders on to close out partial. And when he got up in the morning, he goes, yeah, I didn't even close out. I'm like, why didn't you close out? You should have had pending orders on. Yeah, I just wanted to get more profit than just my $200 a day. I said, Ed, we're trying to teach you how to make a living. I know you're retired, but instead of going out and working 8 hours a day, if you can trade for just a few hours and make your daily bread, is what I was calling it back then why not do that? Trade for a few hours, make your daily bread. We're about to get stopped out as it's pulling back on our runner. So I was like, why didn't you close out partial this morning when you got up and checked? Because you checked early, right? When you got up, yeah, I checked. Well, I just figured, he started using those terms that I hate to hear. I just figured, since it had already moved quite a bit, it was going to continue and keep moving on. And I looked at him and said, why? What makes you think that? What made you, you're saying you figured that, why? And he's like, I don't know. It had moved so far, I figured it was going to move more. I'm like, that's pure guesswork. I'm like, there's nothing that tells you that should go. And I said, did you forget about U.S. News this morning coming out at 8:30? Oh, yeah, we had U.S. News. I'll get logged in here and check my trades. So he starts booting up the computer. I'm like, are you going to trade today? Are you ready to take a new trade for the day? He goes, well, yeah, I'll take one. I was like, good, because your other one stopped out. And he's like, what? I'm like, yeah. You needed to close partial. I said, because when the news came out 5 minutes ago, you were stopped out. It was a quick 3-minute to get to where the stop originally was. In the first 3 minutes. So 2 minutes before he walks in the door, it goes up and stops him out. I was like, you were just stopped out. Because I know where your stop was. Because we all took the same trade. So I'm like, I know where your stop was. Or close to where it should have been, because we all took the same trade. And you were just stopped out. So, of course, he boots up. So instead of locking in his 200 for the day, moving a stop to break even, leaving the two runners on, getting stopped out at zero loss on the runners, he ended up with a full negative trade. When he was up for the day, what he needed, or up in the morning from what he needed for the whole day. The 200. So, again, I couldn't get him past that mentality of it's moved X. I just think it's going to move further. When that was his mentality, when you should be looking at the chart seeing, look, it keeps pulling back. When the market moves, it doesn't just move. You don't see 40 candles. I'm not looking at a chart here with 3-minute chart where I see 40 or 50 candles that are green. It just doesn't happen. It might move 5 or 10 candles green, and then you'll start seeing red candles. It may be 1 or 2, a small pullback or resting period, where we get that little time break, that little pause, and then it keeps moving. Kind of like what we have here on the Russell, rocky start here, but now we have, what is that? 1, 2, 3, 4, 5, 6 green candles. And then boom, we got two red ones that fall back right now where it's at. These 2 candles is pretty much wiped out 1, 2, 3, 4 of the green ones. And if it continues pushing, which it's doing, it's pushing all the way back down here to the 5th one. It may push all the way back down here to where the close of this red one is. And pretty much that whole upward move, we might see in 2 candles on the way down. So the market moves in waves. We know this. Be aware of it. There's no reason not to. There's no reason that you should be surprised when stuff like this happens. So, what do we got? We still got about 10 minutes. So anyways, Dow Jones, we finally got a signal here as it broke barely over the line. Again, back and forth between the high and the low. We have FOMC this afternoon. So you always have to be aware of news because it can affect your trading. It has affected our trading for the day. Dow sideways, hasn't broke out. Russell broke out over here, was the sell signal, You were in positive a little bit, a lot of negative, almost wicked out, but it did go hit PT1, and that would have been a good profit target for you. PT1, because of the price barely creeping over and giving you the sell signal. It was actually that candle there. So yeah, you sat in the negative for a while. Pretty much right after your entry, it went in the positive for a little bit. You're like, okay, great. Made a good decision. It pulls back. You're in the negative. Okay, probably made a bad decision, but you just have to stick to your rules. This is rule-based trading. All your trading should be rule-based trading. Okay? You should never just sit down the chart and look and see things start moving and buy and sell and buy and sell and back and forth. You should always have rules. So we make the rules up to stick to them. You have to take your emotions out of trading. The only way to do that, or one of the ways to help you do that, is to stick to the rules. I set up the rules that when I got a sell signal, and I'm getting a sell signal because it's closed past the low, that I'm going to sell. That was how I tested it. That's how I'm doing it this week. I'm not waiting to see if it moves a little bit further. You know, it pulls back and then you get this candle get in, because I'm getting in at a worse price for one, but because also I set up that rule that that's my entry. I had a rule that I was going to put a pending order on PT1. Now that has been adapted if, like we did Nasdaq today, where this candle I got in on, look at it, from the low to PT1, it was almost halfway there. So we adapted to that and pushed the pending order to close out and barely got taken out. Okay. I mean, it wicked down here. It took us out. Grateful for that. But look at where the candle bodies are. It just does not want to move past that level. Okay. And close past that level. So I feel lucky on this one, 100%. Okay. Now, if it would have came down and touched level 2, closed near level 2, then I'd say great. That's right now. I feel lucky that even popped to hit. So I cheated a little, moved my order out to try and catch more of a 1-to-1 ratio from where my stop was to the entry. That worked out today, but by doing that, I could have taken a loss. Well, no, I'd still be in. I wouldn't be at a loss, but I wouldn't have profited yet because it hasn't come down. Yeah, if I went down here further, guys, what I'm talking about, I could be sitting in the trade still with 3 contracts in the back and forth in this, and we'd be positive, but up in profit, down a little bit in profit. So right now we're sitting in the negative. We were in the negative a little here. We're going to lose 64 back. So overall on the day, we lost 190 or 280, 190. So not the best day. We've made back 190. So we're still down about $90. And we're going to lose back 64 if it pulls back. So if it pulls back and hits the 64, we're going to be down 150. And this is day 3. So it hasn't been the best week for this so far. And this is exactly how I back tested it. But like I said, a lot of times it only went to PT1. So it still remains to be seen because I'm still in it. And we'll see what FOMC has. Does anybody have any questions before we go? Because I do need to kill this at 12 today. And there's no need for us to sit around and watch, because either I'm going to get stopped out or it's going to move down here to PT2. And if it moves down to PT2, okay, if it comes down and closes past PT2, and if we get a bar close past that, I will move my stop down to PT1. It's either that or I leave it open, but my rules that I set up for this was move it to PT1. When a candle closes past a level, we move our stop down to the next level. So right now I'm either going to lose back 64, which puts us in the negative 150 leading into tomorrow, or it's going to hit PT2, which then we can pull to PT1, and then, of course, FOMC. So I'm okay. I'd rather see this sit sideways to FOMC and leave my stop where it is, and then we'll see what happens. Or if it pushes down here between 1 and 2, move sideways. Fine with that, too. and then we see what happens. So we'll see. It could come back and stop me out here in the next 10 minutes for all I know. So anyways, I hope you guys enjoyed this. Not great profit so far. Again, testing this back over last month, it did 13K, and it was the same way. Exactly. Placing 3 contracts, closing 2 at PT1 with a half stop loss every time I used the halfway point. Yeah, so, okay, thanks on the moves. So again, with FOMC coming out news, a lot of times you wait for that. So we'll see what happens this afternoon. And again, I'll post out this afternoon the quad chart view once after 4 o'clock. So sometime tonight, I'll post a couple things. We'll post the quad chart view with all 4 of these. And then I will post where these, the 280, the 190, and whatever we're left with on our runner, you'll see those 3 prices priced out there with it. And then, because each day I'm posting. So Monday it was this, the 319, 117.7 runner. Yesterday it was the 197 and 94 on the runner for our one trade. We were up 95 this morning because of that yesterday's gains. So yesterday's gains made back, you know, the second trade Monday made back part of our loss on our first trade. The gains yesterday made back our negative 195. We were still negative 195 going into yesterday. So the 197, the partial, covered the negative 195, and then the 94 put us in the positive. So we were up $95 this morning. Down 280, back 190, leads us to where we're at, where we're, where we're up here at -5. So we're in the positive. Not a good week at all so far, trading just Nasdaq. And then we have the potential to lose back as it's drifting back toward our stop. So we can lose back 64. So we won't be that bad. So if it goes back, we've got 5 in the hole. We could lose back 64. So we would be down 60. We'd only be down 60 today. But that's our week. If it hits my stop, we're down 60 on the week. So not happy with that at all. But we got 2 days left. We'll see what happens. We're just trading it the same way. The only thing I could hope for today is that FOMC takes it the distance short. But we'd have to still be in it. And I don't know that we still will, based on our stop. We'll see. So I'll let you guys know. But at the end of the day, I'll post this chart. So you'll see NASDAQ. You'll still see the execution orders on there. So you'll see if we're stopped out or not. And then the quad chart. And then also the tracker. So I'll update the tracker on how all 4 did today. And then I will go through on Dow tonight and test it to see how it held up. And then what I am going to do, probably on Saturday, I'll do it over the weekend, probably Saturday. Because tonight I'm going to run Dow. What was day? Wednesday? Thursday I will run, Thursday I'll run the Russell, okay, through. So tonight I'll run Dow. Thursday I'll run the Russell. And then Saturday what I'm going to do, this tracker we've got here, we're tracking each day. I'm going to go back on Saturday and I'm going to run through NASDAQ, S&P, Dow, and Russell and look back through those days I back tested, and we'll run the replay. And I'm going to go back and specifically put in every one of those days. So I'm going to make a new sheet, copy this sheet over, make a new one, and I'm going to go back and tick them. And then I'm going to look at which one would have played out better. It'd been a better selection for May. Okay, so I'm looking before May. We're looking at April and looking back and seeing which one. Right now, S&P looks the best. Okay, profit target 3 one day with one trade. Profit target 2 one day, and that's where it closed past level 3 and 2. So when these prices are here, it's the price closed past level 2, not just touched it or not came up near it. Okay, so like yesterday, S&P went and closed above profit target 2, but almost hit level 3. Same with Nasdaq, almost hit level 3. But I'm not marking that. We're only marking what it closed past, because that's where we move our stop. When it moves past, closes past profit target 3, we pull our stop to profit target 2. And so on. 2, we move our stop to profit target 1. So we know we're getting more profit. So which one of these are we getting more profit on? That's what I want. I want to know in April which one of these 4 profited most, hit the furthest take profit levels overall with one trade. Love to see one trade across the board and profit level. If I find one of these that there's one trade across the board and it always hit level 2, I'm probably going to trade that one. Whereas Nasdaq a lot of times is barely getting to 1, or it's getting to profit 2, like this one, first day, but we had to take 2 trades. I'd rather get to profit target 2 and only take 1 trade, like yesterday, profit target 2, 1 trade. So again, if I see something that gets to profit target 2 every day, but there's 1 trade, I'm going to trade that versus something that gets to profit target 2 every day, but I have to take 2 trades, because that still means a losing day. Okay, the first trade is going to be a loser. That's why we took a second trade. That's why there's 2 trades here, possibly. Or it could have been 2 winning trades, because we're taking every signal. That would have to be dialed down a little more to look. So that's what my plan is. Again, this won't be done until Saturday. I'll share the results on, I might shoot it in a video. If not, I'll share it next Monday night. So don't forget, next week it will start evenings for 3 weeks. All right, guys, so I got to get off here. Got a meeting at 1:30 I got to get ready for and head to. So hope you enjoyed. There's our tornado siren test. So we'll see where I'm going to see where we're at real quick. Still in the same spot. So again, we might lose down $64 on it. We'll see. That would put us in the hole, about $60 roughly. So not looking for much till FOMC. So be careful trading this afternoon. If you have traded this morning and took a profitable trade, there's no use in giving it all back. So don't get anything riskier than you would normally do. All right. So I will see you tomorrow in the live. Look for a post in Discord later on the results. Have a good day, safe trading, and safe afternoon with